Hi everyone, today we are going to speak about support and resistance levels. If we look at the charts, while the price moves up and down, we realize that there are certain levels of areas where the price bounces back or just passes by with a high volume. These levels we call support and resistance levels. But how and why are they formed, and how can the market act around these areas? So, what's a support and resistance level? A support level is a given price level or area where we can expect a significant rise in volume, as traders and investors are convinced that the price can go under that level. Usually it comes with huge volume and moderate volatility. And a resistance level is just the opposite. It is a given area or price level where basically traders and investors think that the price can't reach higher highs, therefore they enter short positions in the hope of the market will respect that level and turns down. We cannot forget that this is never that easy. If it was, everyone would be rich and successful in trading. Let's see WTI, so oil, right now, and let's try to find support and resistance levels. So right now we are on a weekly chart, and basically support and resistance levels can be very easy to be drawn. So let's see some ideas and examples on WTI. What I usually do when it comes to support and resistance areas is that I use boxes. So here you can find a support area, because as price was coming down, for the first time it couldn't break through, and basically it formed the first point of the support area. Now price bounced back and then came back again, and it wasn't able to break through, and that's the time when traders can actually open the position into upwards. So what it means is that as soon as price just jumped back, some further confirmation obviously is required, but then you can open a long position with a moderate risk-reward ratio. So that was our support, and let's see resistance. Resistance area, if we want to make it, we can do it like this. You see, it's a very strong resistance area, as price wasn't able to basically break through at none of the times. It's from 2011 up until 2014, before the big plummet. So as you can see, price first touched this area, then came back, and second time, third and fourth time, if you were there and if you were trading that time, you could easily make money. And the reason is because it's not only a strong area, but you know, after the second time you could have seen that it is expected that price could fall, and basically that's the simplest way to make money on Forex market. Obviously it's not that easy. I mean, it's never just a bounce or a breakthrough. You have to analyze candles, news, and other technical aspects of the market. What you have to understand is to find these areas. It's very easy to find them. As you can see, these areas are support and resistance areas. But when it comes to some specifications, the first one would be round numbers. In most of the cases, the support and resistance levels format around a round number, and it has many reasons. First, investors usually put the stop orders to round numbers, hence making these areas stronger. Secondly, these areas have some sort of psychological power in people's mind. So if I just go to euro dollar and you see this here, I don't have to even check it, because I will know that if I put my trend line here, 115 will be the round number. As you can see, price couldn't retrace after this breakthrough. Obviously traders are waiting for these movements, but I can do it at 114 as well, or 113 or 112. You'll see that around these areas price had more struggle. You can see it in the past. So these areas are good areas to try to trade with. When it comes to these areas, we speak about two things: breakouts and backtests. The most important question when we are speaking of support and resistance levels is the reaction of the market in the following minutes, hours, days, depending obviously on the time frame that we are using. If we're speaking of the breakout of resistance levels, it means that the buyers are willing to pay more for a certain instrument, thus the demand for the given instrument will be higher. If you're speaking of the breakout of the support level, it means that the sellers are in power as the price of the certain instrument is overpriced according to the investors. Hence they push the prices down. If a breakout happens, we have two scenarios depending on the time frame of the chart. First one is that the investors were able to break through a given support or resistance level with high volume and even higher volatility, thus the price will continue to go down. So I will show you one, let's say here. Here you can see a clear example. Price was coming down and traders or investors were able to break through and price was going down further. Then a backtest happened and price just went down even more. Here is a beautiful one. Since then price couldn't come back. And it's a very good trade opportunity. But the second scenario is that the traders broke through that certain level, but the market considers that it was only a false breakout. Thus the price will backtest the area just to make sure if it was on purpose or just some stop loss hunting. Let's say here price went down, came back and went down again. It's a backtest. Here this is what we call a backtest. Or here it's a backtest again. And that was clearly a backtest and then we went down. We call this trader's remorse. What it means basically is the investors start inspecting the price of that instrument and realize that it is overbought or oversold, thus closing their positions and opening another one in the other direction. I hope this small video helped you to understand support and resistance levels a little bit more. If not, just shoot us an email and we help you more.